There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechnoTrader. TechnoTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technotrader.com.
Hi everyone, today we're going to talk about the best recommended stocks. There are all kinds of recommendation services out there that you can buy into and pay anywhere from $100 to $500 or more than $1,000 for recommended stocks, and these services provide you with a list of stocks that you then can study fundamentally and the financial statements and the charts and the whole 9 yards. Many people subscribe to these recommendation services, and the recommendation services make a ton of money. Now, the SEC rules and regulations are pretty limited on this. What the SEC states is that if anyone recommends a stock, they must tell you if they have invested in that stock or are holding that stock. So have they bought that stock? Because the SEC feels that you should know if that company is profiting from you buying that stock. So the recommendation services should provide you with the information as to whether they are actually invested in that stock or not. Now, there are a ton of recommendation companies out there, and they make a lot of money recommending stocks. But how do you know whether that recommendation service is worth the money? And how do you know that that stock that's being recommended is actually going to make you money? Or is it only making money for those who recommend the stock? There's a huge amount of trust that comes from the average American who invests in mutual funds or wants to trade stocks or uses recommendation services. They trust the information that they buy. They trust the information that they're told, whether it's free or whether they pay an annual cost for that information. But just like anything in life, not every company that recommends is a good company, and not every stock that's recommended is a stock that you should buy. The problem with recommendation services is it assumes that every investor has the same amount of capital, has the same amount of experience, understands stocks at the same level, has the same education, has the same goals, and has the same expectations. And that is not true. Every investor and every retail trader are individuals, and they all have different size capital bases. They have different risk tolerance. They have different experiences. They have some education to no education to lots of education. Some of you have spent a ton of money on your education and you're still not making money. And you use recommendation services hoping that you can find a stock that will make you rich without a lot of effort. So the recommendation services are recommending a stock, but is it right for you? Now, what you need to do if you want to use these recommendation services is also check their background, because they should be credentialed. They should be somebody that has initials after their name and have had financial services education, formal education in college and universities, and plenty of years of experience in the stock market. In the stock market, we call it the brain trust. Brain trust meaning your brain. When somebody has had extensive experience in the markets over many, many, many years, they have a vast amount of knowledge about how the market works. They are a brain trust, and they provide excellent understanding of what's going on for the market for those of you who are brand new or just starting out. If you want to use a recommendation service, make sure that you have someone who's had extensive experience trading and investing. If you want to be a trader, the recommendation services should not be long-term investments. If you want to be a long-term investor, you should not be getting recommended stocks for short-term trading. They're two completely different ways of trading or investing in the market. Short-term trading is only concerned about the next couple of days to few weeks. Long-term investing is not concerned about the next few days to few weeks, but concerned about the long-term growth over 1 to 5 or 10 years. So it's a completely different perspective, and I see a lot of times where short-term traders are using long-term investment recommendations. And so they're not going to get the results they want, or vice versa. Long-term investors are trying to invest in trading stocks to trade on a short-term basis. You can do both very successfully, but it requires different lists. Now, you can spend a huge amount of money. I've heard people spending $500 or $1,000 a year annually just to get a small list of stocks that are recommended. And I'm not sure what they feel that means, because the recommended stocks, when I'm given those lists to check over as a technical analyst and give my observation looking at it technically, 99% of the time the stocks being recommended are at all-time highs or new highs. That is not a good place to place an order for a long-term investment, because new highs and new all-time highs are often the peak of a business cycle. And so that stock is going to correct. It's going to move down in value after you buy it because it has already reached the end of its business cycle. All businesses have cycles. Some businesses cycle once a year. Some businesses cycle every 3 to 5 years. Some businesses cycle every 6 to 10 years. Right now, with so much new technology coming to market right now, cycles tend to be shorter, 3 to 5 years. So if a stock has been moving up for 5 years or so, and it's at a new all-time high, and revenues are sky high, and earnings are off the chart, that's a peak. That's the end of the business cycle. The company is going to have a great deal of trouble trying to have more growth, more revenues, more earnings, and higher stock price. It's going to start correcting at some point. And so you have to really think about that. It's very exciting when you see a stock chart that's going up and up and up, and the prices are going up, and oh, I should buy it. It's going to keep going on forever. No. All businesses cycle. All stocks cycle. That's what causes the stock market to be such an exciting place to make money. If you buy at an all-time high or a new high, you are likely getting into the stock very, very late. How do you find stocks that you can trade that are just starting to form bottoms, and there are lots of them right now, that are going to be strong swing trades or momentum trades, and eventually very good long-term investments once they complete their bottoms? Because instead of thinking that a bottom is a dangerous place and the stocks are going to go down, down, down forever, stocks are only going to go down so far. Then they're going to hit a fundamental support level. This happens all the time. This is standard. If you were a Technotrader student, you would understand this. Meanwhile, recommendation services that I have been given and shown, they're recommending stocks at all-time highs that are beginning to peak and have a topping action where they're going to correct for a year, 2, 3, 4, 5 years. You could be in the stock waiting for it to come back for a decade. A lot of times these big blue chip stocks, when they finally peak to their super all-time high, it takes them at least 10 years to correct and reinvent, because the larger the company, the slower it can turn around and reinvent itself. Now, small caps are different. Small caps react more quickly. They also are more volatile, so you have to be ready for that volatility, that up and down action. So if you're short-term trading, small cap stocks are awesome because institutions hold most of the outstanding shares, so there's a huge liquidity draw when anyone wants to buy more of them. And they have a wide 5-cent spread, which makes it great for short-term trading. And they move with a lot of momentum when they do move. The older the company, the slower that stock tends to move. That may seem like a security blanket, but when you're trading short-term, that's a bad idea. So getting recommended stocks that are really big companies and are moving really slowly and the price is hardly moving at all is not going to be a good short-term strategy for you. Recommended stocks tend to wait until the company has reached this huge market saturation phase, and then they recommend the stock. And this is very popular because those that know how to buy and sell stocks, the billionaires and the 1% who make all the money and pay very little taxes, know this. So as stocks are recommended, the wealthy and the buy-side institutions and the big banks are selling. And they're making huge profits, and the stock eventually will go down because the weight is on the large lot is on the sell side as you buy. Now, if you've ever had a recommended stock and it goes down after you buy it, that is why. Because you bought it high. The whole theory for the last 150 years is buy a stock at a low price and sell it at a high price. But every recommendation service I have seen so far has you buying at an all-time high and holding through the correction to the low, where you probably get very disappointed after several years. This stock is never going to go back up. It's never going to recover. I give up, you sell, and boom, the large lots are buying. The reason that the average investor doesn't make a lot of money in the stock market isn't because it's hard. It's actually quite simple once you understand what's going on. The reason the retail stock traders are not making a lot of money, or options traders are making very little money, is because they don't understand the cycles and how things actually work in the market. If you were to take a recommendation list of stocks and send it to me and I analyze them, most of them would come in as a very high risk entry for you to buy that stock, even for short-term trading. There might be some momentum left, but the probability is that they're going to go down. So how do you find stocks? How do you get your own list of stocks that are great stocks that you can buy for short-term trading or long-term investing and make a killing on? A lot of money. How do you do this? Well, it's actually very simple. TechnoTrader has a group of scans, and every day these scans pull up a list of stocks that are forming bottoms, that have large lot accumulation going on, that tells you that the dark pools have decided this is an excellent price for the stock and they're bargain hunting. This stock is going to go up in price for short term and for long term because the dark pools have done all the homework for you. They've studied the fundamentals of the company. They've studied the reinvention. They've gone out and visited with the CEO and the CFO. They've done all the legwork. They've done all the analysis. They've done the quantitative analysis, the risk analysis. They've made projections over the next 5 years of the growth for this company. They do all the homework. All you have to use is the TechnoTrader scans, because the stocks come up in the scans telling you where the dark pools are accumulating. And they also tell you where the large lots or dark pools are selling when a top is at risk. So when you have all-time high recommended stocks, most of those are probably have dark pool rotation, is what I call it, where they're slowly rotating out of the stock, trying to not move price down, but to get out as you buy. If you want a great list of stocks to short-term trade or long-term invest, what you need are TechnoTrader scans. These scans come with our courses because you need to understand how to buy the stock in a bottoming formation to make short-term swing or momentum trade, or for a position trade of several weeks to several months for 10 to 40 point gain. So on 100 shares of stock, you would be making quite a bit of money. Or for a long-term investment of 1 to 5 to 10 years. The scans take the guesswork out of it because the dark pools do the homework for you. They study the financials. They study the fundamentals. They go out and study what's going on in the industry. They see what's happening and going on. They buy a lot of small caps because small caps will become the big blue chips in the next 5 to 10 years. Instead of paying a lot of money every month or every year for a list of recommended stocks that are all-time highs, that the wealthy people, the billionaires, and the dark pools are selling as you're buying so that you end up with a loss on your investment, You should be using Technotrader scans to trade with or invest with the dark pools and the professional traders. This gets you into the stocks when they're at a bargain price and allows you to make the maximum amount of profit for the time that you intend to hold that stock. We've had plenty of stocks that we have had come up in our scans that help our students buy for short-term trading or invest for long-term. And these help our students greatly. This is why I developed these scans, because now you don't need a recommendation service. You don't need somebody telling you to buy this stock so they can sell it. The SEC has no requirement, and I think this is a huge, huge flaw in the SEC rules. The SEC does not require a recommendation company to tell you if they intend to sell or are selling when they have just recommended a stock. They only require that they tell you if they own or have recently purchased that stock. And therein lies the biggest flaw of the SEC regulations and rules for recommendation stocks, is that it doesn't require that they tell you that they're actually selling as you're buying. Because the recommended stocks don't come out until everybody else has already bought the stock, and they're waiting for you to buy the stock because it's on a recommendation list, and you don't realize that they're planning to sell when you start buying. And eventually those large lots against your smaller lots will mean the stock moves down. Plus, there's no one else buying. It's the end of the business cycle for that company, and it's going to go down and correct for a very long time. So come to our website, find out about Technotrader scans, find out how you can become a Technotrader student and have consistent success in your trading and your investing. I'm Martha Stokes, and that's the radio show for today.
There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to Technotrader. Technotrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technotrader.com.